What an ugly day for long-term investors of Chinese stocks. We have DIDI that's down 22%. They announced that they were going to delist from the New York Stock Exchange and list on the Hong Kong market. This created a lot of fear and a lot of uncertainty amongst other Chinese stocks. And so today it plummeted. We have BABA, which I'm heavily in. This one is down 8%. NIO is down 11%. Today I sold my DIDI shares. I had 530 shares that I bought at IPO price, and I also sold some cash secure puts not too long ago, thinking that DIDI is fine. They can do business in the US. Boy, was I wrong. I talked to TD Ameritrade, that's my brokerage, and I asked them, what's going to happen with my shares and options? Well, there's no official news. And they said that they are considering converting them into shares traded in different countries, but nothing is for sure. I talked to another person from TD Ameritrade. Looks like there's no concrete plan to reorganize. If they do delist, they could pay shareholders, but they don't have to. So it is really up to them if they want to pay us or not. So the better choice for me was to sell everything I had. It's just so much uncertainty with these Chinese stocks right now. And I said it in my previous videos about possibly hedging your portfolio if you have a huge position. And you can buy puts, you can buy some put debit spreads, which cost less than buying long puts. And right now, the puts are very expensive just because the VIX is currently above 30. It actually went to 35 today. So when the VIX is high like this, we want to be selling options. If we take a look at the implied volatility on BABA, I never seen Alibaba implied volatility over 100%. That's crazy. So buying calls and buying puts are very costly right now. You have the 113 calls, and these are next week's calls too. They cost $520, and then the puts as well. So what you can do is either sell some bear credit spreads, or you can buy some put debit spreads. So that's what I'm planning to do. I actually just bought one, which one is not going to do much because the stock has already gone down significantly. If I had bought these when I mentioned it over the weekend, these were $2. They are now worth $8. They're too costly. So here's a suggestion. You can buy the 95 call and sell the 85 call. You would only have to pay $195, and you can make a max profit of $805 if Alibaba is below 85 in January. You know, at this rate, I'm pretty sure there's a possibility that it can drop below 100. A lot of people did not think that Alibaba can even drop below 120, and it did. This entire week, it's been dropping over 2%. Very depressing to see our portfolios like this. And it's real. This is what happens when we invest, not just in Chinese stock, just investing in general, trading in general. We will experience losses. I have said this before, be careful when you're buying short-term, either call options, because you will get destroyed. I have gotten destroyed many times with buying short-term call options because I felt that this was the bottom. But with Chinese stocks right now, there's so much risk. This stock was trading above 160. This was just 2 weeks ago. 160 to now 110. And this is supposed to be the largest e-commerce in China. Fundamentals doesn't really matter right now. We have the RSI. It's extremely oversold. There you go. The indicators, they don't matter. What matters right now is the sentiment around Chinese stocks. And the sentiment is negative. there's no positive sentiment right now. And with the news of DIDI, it's just going to get worse. So I don't know what to do at this point. I am scared. And I'm sure there's a lot of people that are in my position. They don't want to admit it. We're just going to have to see what next week is going to bring. But at this rate, I don't expect any good news. So just prepare for the worst. And if you're a margin, be careful and hedge your portfolio if you think that there's going to be more downside. You know, this creates a great opportunity for people that are long-term investors and that have not gone in and they believe that Chinese stocks are going to recover. You are definitely getting it at a discount, whereas most of us got Alibaba above 150. Some of us got it above 200. Incredible how we thought that 200 was the bottom. Hopefully, you know, in a few weeks, this can turn around. But right now, it's just going to be a lot of uncertainty, a lot of fear. So be careful out there, guys. And let me know in the comments down below if you guys are hedging your portfolios or you're throwing the towel and calling it quits on these Chinese stocks.
US-listed shares of DIDI plummeting today after the ride-hailing company said it would delist from the New York Stock Exchange and pursue a listing on the Hong Kong's exchange. Instead, it's seen as a preemptive move as Chinese-based US-listed stocks face ongoing regulatory scrutiny. Chinese stocks under pressure today and this year. The K-Web China Internet ETF cut in half in 2021. Your Trading Nation team today is Craig Johnson of Piper Sandler and Ava Ados of ER Shares. And Ava, I guess the regulatory risks sort of outweigh the benefits of owning Chinese tech.
Absolutely. We have eliminated our China exposure. Over the last year or more, we have seen a series of unpredictable news announcements that have been detrimental to Chinese investments, especially ADRs. And that's just another reminder that the regulatory risks associated with them exceed and are overweight any potential benefits that you can have with their growth names.
Craig, what's the trade?
You know, the trade is, the chart says it all, Seema. When you look at this, you can see it's just purely looks like people are trying to catch a falling knife. You're making 5-year new lows in here on the BKCN. And if you drill down now into looking at the BABA chart, that's 10% of that particular index. There is no indication we're getting anywhere close to making a bottom. The evidence says at this point in time, Seema says pass on this and wait for clear evidence that a bottom is getting set.